onto the markets, the Dow closed to hit a new high. Yep. Oil prices were basically flat. And remember that phony boom they had over there in Asia with the Hang Seng and the Shanghai? It ain't so high anymore. Nope. Both of them were down 1%. Artificially boosted up. There's a real danger going on in China. So Bitcoin's down, but it's still pretty high. It's up there at the 67,000 per coin. Could you imagine that? 67,000 per coin. Again, we've been very positive on it in your Trends Journal. We give the breakout points, and we said that the upside, we've been saying, is much stronger than the downside, and that's exactly what happened. And gold.
In today's news recap, how high can gold and silver rally? Gold's record-breaking rally continues, and following another shallow mid-month correction that saw buyers return ahead of $2,600, spot bullion has returned to trade just below the $2,685 record reached last month. The precious metal market has witnessed an unprecedented strong uptrend this past year, with gold and silver both trading up close to 40%, with only minor corrections seen during this extended rally, a sign of strong underlying momentum and FOMO, fear of missing out, of a rally that at this point shows little signs of ending. Since hitting a cycle low last October, the gold rally has, as per the 3 attempted trend lines, continued to accelerate, highlighting the level of FOMO and fundamental support the metal has and continues to enjoy. In the short term, traders will be watching incoming U.S. data to see whether support remains strong enough for the metal to reach another fresh record, the 6th this year. The bullish drivers throughout this period are numerous, with the most important being the risk of fiscal instability, safe haven appeal, geopolitical tensions, de-dollarization, uncertainties surrounding the U.S. presidential election, and now also rate cuts, not just by the Fed, but by other central banks as well, reducing the cost of holding non-interest paying investments in gold and silver. The latter potentially supports increased demand for gold-backed ETFs from underinvested asset managers, especially in the West, who up until May had been net sellers since the FOMC began its aggressive rate hikes in 2022. The sustained demand for investment metals during this time has, for now, triggered a breakdown in the normal inverse correlation between gold and the dollar. The latest example is the lack of a negative reaction in gold to the 2.5% gain in the Bloomberg Dollar Index since the beginning of September, a period that has seen the timing, speed, and depth of future U.S. rate cuts pared back amid continued strength in U.S. economic data. However, with inflation increasingly getting under control and in some countries and regions falling back below 2%, the prospect of further rate cuts remains. This week, a poll among delegates from around the world attending the London Bullion Market Association's annual gathering predicted higher prices in a year's time for gold, silver, platinum, and palladium. While gold is expected to climb around 10% to $2,917.40 an ounce by late October next year, delegates held a very strong view on silver, seeing it gain more than 40% to reach $45 an ounce, with experts noting that industrial demand continues to drive market deficits as mine supply struggles to keep pace. Now we'll show you the best clips of the latest interview, but first, hit the like button, smash the subscribe button, and turn on notifications so you do not miss out our daily videos. Enjoy the episode.
$2,691 an ounce as we go on the air. $2,691 an ounce. Hey, what was one of your top trends for 2024? A golden year for gold. Again, gold has a potential to keep rising. It hasn't had a big downward hit yet, and it's going to get one. But this is pretty strong. So even a downward shot, it's still way up. So gold prices, when we made that forecast, they were $2,041, and now they're $2,691. And that's why you subscribe to the Trends Journal. On to more economic information here. Big news. Retail sales rose 4% in September, better than expected. And the job claims dipped a bit. So they say it's up 0.4%. So from a year ago, sales have increased 1.7%. But inflation, the CPI, that's up 2.4%. So in other words, these numbers are total. Warning, bullshit alert. That's right. People are spending more to buy less, because week after week in your Trends Journal, we have all the people being fired. We've been doing it for over 100 weeks. All the businesses that are going bust all over the world. So again, these numbers, they don't mean much of anything. Health premiums soar even as inflation is cooling. This is from the Wall Street Journal. The cost of employer health insurance rose 7% for a second straight year. So we keep putting, week after week, we put in the numbers: car insurance, health insurance, one thing after another, housing insurance. People are paying more for everything. And again, your housing prices have gone up 50% since they launched the COVID war in 2020. So prices are still very high. These inflation numbers, they're good for the equity markets. And by the way, the strong equity market is a plus for Harris. Again, can't stand either of them. As you cover your Trends Journal, it's the Disney World White House. It's China into the World Trade Organization and NAFTA, when all our jobs, manufacturing jobs, flew out of America. As we've been writing about this, China's GDP before they got into the WTO, 2 weeks after 9/11, by the way, it was like this. Got in, skyrocketed up. We write, with every boom, there's a bust. And the housing bust is big, the apartment bust. They overbuilt it like every boom, but they made a bad situation terrible when they locked down for 3 years of zero COVID policy. So this isn't only China going down, it's going down everywhere. Germany, the second largest economy in the world, recession this year and next. Again, the markets have nothing to do with reality. Main Street and Wall Street are totally separated. Fell 5% compared to the same period last year. Depository receipts were down 7%. Goes on and on. But again, old news for Trends Journal subscribers. Week after week, month after month, year after year, we've been writing about them. Lucid slumps on plan to sell 262.4 million shares. Lucid Group shares slid after the electric vehicle maker said it plans to sell blah, 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 because they're not doing very well. Because Stellantis vehicle deliveries slumped 20% in the US. But the bigs are getting bigger. The merger and acquisition activity, as we're writing in the Trends Journal, again, for many, many years, special column, bigs get bigger. And now Amazon buys stake in nuclear energy developer.
In today's news recap, silver prices near multi-year high as gold approaches record levels. Silver prices are rallying sharply on Wednesday, approaching the multi-year high of $32.96 reached on October 4th. A breakthrough above this level could trigger a rapid ascent towards the next significant resistance at $34.35. Both silver and gold are benefiting from a risk-off sentiment in the market. Gold is trading near its all-time high of $2,685.64, with the current session high at $2,682.88. The precious metals market is finding support from weakening equities and declining bond yields. Traders are closely monitoring upcoming U.S. economic data releases, including retail sales, industrial production, and weekly jobless claims. These reports will provide crucial insights into the Federal Reserve's potential timeline for interest rate cuts. San Francisco Federal Reserve Bank President Mary Daly has indicated that the central bank remains on track for rate reductions this year, assuming economic data aligns with expectations. Delegates at the London Bullion Market Association's annual gathering have forecasted a substantial increase in precious metal prices over the next 12 months. They predict gold will rise to $2,950 and silver will surge to $45 per ounce, representing significant upside potential from current levels. Now, we'll show you more clips of the latest interview, but first, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
Onto the markets, the Dow closed to hit a new high. Yep. Oil prices were basically flat. And remember that phony boom they had over there in Asia with the Hang Seng and the Shanghai? It ain't so high anymore. Nope. Both of them were down 1%. Artificially boosted up. There's a real danger going on in China. So Bitcoin's down, but it's still pretty high. It's up there at the 67,000 per coin. Could you imagine that? 67,000 per coin. Again, we've been very positive on it in your Trends Journal. We give the breakout points, and we said that the upside, we've been saying, is much stronger than the downside, and that's exactly what happened. And gold, the International Mafia Federation, International Monetary Fund, they warn that government debt, large increases will boost the number to $100 trillion this year. And the U.S., it could hit 115% of the GDP by 2026. The U.S. government debt started the century at less than 60%. That's this century, not like the 20th century, the 21st century, 24 years ago. It was 60%, and now it's going, the debt to GDP could reach 150, more than double. This is serious. Goes back to gold. And you're seeing all the articles coming about the BRICS uniting. They've had enough of the United States economic and geopolitical hegemony. So again, this debt level is big. It's only going to get worse. Flooded, you Trump fans, Trump, Biden, trillions of Biden fans, trillions of dollars of money backed by nothing and printed on nothing. The economy should have crashed. All over the world they did this. So it's all fake money. And that's why you're seeing gold go up. But of course, they don't put that in here because they don't know. By the way, not a word about the office building bust. That's out of the news. Nobody talks about the vacancy rates and the occupancy rates. That's going to bring down the banking system. Luxury's last growth engine stalls as China's sales cool. This is from the Wall Street Journal. And they're talking about all the luxury sales like LVMH. They're down all over. As I said, the fish rots from the head down. Again, we've been writing about this week after week after week after week after week after week. The numbers are all there. And you're good. China, again, they kill their economy with the COVID war. The people have no dough to spend. Yeah. And this is here. Back in 2000, Chinese customers generated just 1% of global luxury sales, according to UBS. Today, they account for a third. 1%. You got it?
What do you think of Celente's predictions? Is he spot on? Do you disagree with him? Post in the comments section your honest opinion and share with the stackers if you're preparing for a major recession in the upcoming months. Now check this video right here and I'll see you on the other side.